Hello and welcome to another episode of Stock Shots. Please remember, I am not a financial advisor. I'm just giving my opinion based on some things I see, like support and resistance, supply, demand, and of course, some indicators that may be on the screen. So always do your own due diligence. Make sure you educate yourself and always look to the left because we're looking at things that have already happened to think about what things may do in the future. So this is another episode of Stock Shots. Welcome.
Okay, welcome back to your next episode of Stock Shots, where we're covering the TSP funds. We're starting out with our favorite SPX, aka the C fund. So, what happened? Well, we had a good push up. Now we are literally at the top. So, um, if you follow my other actual videos on the exchange, you'll notice that I had a call in for 550 on the SPY, which pretty much resembles this almost identically. What I am looking at now in the weekly time frame is first and foremost, I just want to pull up this indicator at the bottom. This is a indicator that shows strength of market. The last big push we had that was close to about 80, which is almost at 79.91, was back here on this candle, and that was on March 25th of this year. The last biggest strength that was pushing upwards, March 25th. Currently, we all know we're in June. Now, we have divergence in the weekly time frame from March to now. Our price action is currently going up. The strength in the market is currently going down. You will also notice that the positive or buying volume has also gone down. If you look, the last really big week was December 11th. And then we had, of course, the week of March 11th. No buying candle for a week has been as tall as that March or December candles. So, what does that mean? To me, it just means I'm being careful. Can it go up? Yes, it can still go up. I may re-enter. It really depends on how we end next week. I may see some things and a smaller time frame that may cause me to look for a pullback to re-enter or go into the C fund. At this time, I'm gonna hold my hands because you know what? I can't lose any money if I don't get in the market. So at this point, I'm still waiting for the C fund. I'm looking for a pullback. Most likely for me, I look for pullbacks in a 4-hour time frame. So if I go to the 4 hour, what I see is I have an opportunity. So let's mark this opportunity out. So if you missed the push up and you're like, I want to get in, I just don't know when. There's a gap in the C fund from 53.75.61 to 54.03. So if you missed the move up, like me, I was just waiting. There's an opportunity there, and in the 4-hour time frame, remember the 4-hour time frame, 53.36 around there. So anywhere from that average of 54.04 to 53.36 will be a good re-entry, and I'm looking at the 4-hour time frame to go back into the C fund. Now let's go back into the weekly time frame. The reason I want to go back into that is because I want us to look at something very, very important, and it is the structure of the market. We all know we're in an election year. Election year usually means we're going and there's no stopping. It's a freight train. So we had our first real trend line here starting in October. One, two times. Then the second time it touched this trend line, we created the trend line here in March of 23. It tested it again in October for the low. From that point, it's been straight up. Technically two pullbacks. This one here and this one here. We had a small pullback here. So let's see what's going on here. We need a new trend line because we have a new steeper trend. And this steep trend is going to most likely have a pullback. So we have one. Now, if we have another one, look for this area. Now, see, the thing we're looking for is confluence. We're looking for something that agrees with it. So we're going up. We have room to continue up. We know we can go up, but we want to make sure we have good entries when it comes down and take advantage of them. So that 53.31 or 53.36 may be a great entry. So that's it for the C fund. Let's talk about the S fund. There we go. So in the S fund, let's see what we got. Currently, the S fund is actually going with its strength of market. It looks like we did have a M pattern that had a double top here in April and here again in May. Now we're on, it looks like we're on the way down. We had a very strong rejection candle here in June. So this would go with that adage where you sell in May and go away, but it's election year, so you want to make sure if you're going to go and take your money out of the S fund, you make sure that you're going to be going with the trend, the actual trend, not with what may happen. So currently I would look for a bounce from where we currently are. So that is at the 1995.33 area. If it's going to continue up, it needs to first break this new trend. So let's mark the trend first, because it's always better to have a trend marked than just guess. So we have a M pattern here currently, but we're going to mark this with our own trend and not go off of that. Let's get rid of the M. This is what we got going on. So if it breaks this trend, that means we're going up. If it doesn't, we're looking for it to go down, and going down to where, most likely here to the 1930 area, 1928 area. If we break this and we have a good push up, we could look to go past our last highs, because that's what the C fund did, right? So we will at least look for that 2100 area. Now, same thing with our last C fund. You'll notice we had a lot of consolidation here. We have some demand areas and some gaps down here. Also in the C fund, there were gaps further down. So be wary of that. If you see a candle that looks like this one here, this institutional candle, fair value gap, these candles usually need to be broken up. So it's a lot of movement here that had no resistance to it. It just went straight up. So there's going to be orders in here waiting to get filled, and they were waiting from pretty much the halfway up the candle to about 25% up the candle. And you notice that because here you got some filled, and then it came down more, got some filled, rejected off, and took off. So that's a good thing. Look for those as great entries if you're looking to do either options in a your own account, or if you're looking to do re-entries into your S or C funds. So let's look at the international fund. So in the international fund, we have a very strong rejection. We are entering into, and we filled the gap. All right. So this is what happened so far. We had a gap here and a gap here. We had two gaps. They have both been filled. So now that this gap has been filled in an international fund, remember you had a very big institutional candle or fair value gap. This is most likely going to get filled up as well in a weekly time frame. So are we going to look and see if we are going with this trend, which is very much a bearish trend? Are we going to break the support at 77 and then go down to 76? And then if we break that, you already see the next one, 74. So this was a small candle. It did go below this candle here. So with that being said, if we can get a push down into this 76 range, just stay away from the international fund. It's not ready for you. As you go forward, see if, and this is if you get a bounce from this area, that 77 area, if it bounces and you get a break above the current price of 77, say 78 bucks, 78 bucks, look for it to go and try to retest the area of 78.64. That was the top of last week's price action. That was the very top of that wick right there. All right. So if we get that, great. If we don't, hey, leave the international fund alone. But let's also talk about our last one, the F fund, aggregated bonds. So the bond market is saying, I still have strength in me. I got a great candle going up. There's probably some orders in here that need to be filled. So If the bond market continues up, it's already broken out of this channel. You want to see it hit this resistance at 98. If it breaks that resistance, that was the last high before the last highest high up here at 99. We would look for it to break this at 98, go to 99, and most likely just hit 100. Because at this point, if we're not going to be lowering our interest rates for the country, I mean, the bonds are going to be doing great. They're going to be moving up. So if you've never looked at the bond fund before, look at some history for it. It may give you some pause to look at it and then maybe put your money in. But that's up to you. Make sure you do your own research. And let's do something very easy and get this out of the way. So we can see something that may help you with some decision making. So what we currently have is a flag. So we have a bullish flag, and it currently, let's get rid of this. We said it was going to go up, just didn't do it when we wanted to. Here's your flagpole. Here's your flag coming down to a break to the upside. So bullish flag. Now we're looking for it to go at least to around the last high, right? 99. Is it going to go down from there? I think it's going to continue up to about the $100 range. So that's it for the bond fund. That's all our funds for this week. I hope you learned something. Maybe you could do your own research, make your own decisions. I'll see you next week on the next episode of Stock Shots for your TSP funds. I'll see you then. Enjoy the week.